All right, I know your to-do list is a mile long, but stick with me for a few minutes. We're diving into something that might just change how you think about funding your business. We're talking about revenue-based financing.
You got it. Revenue-based financing.
It might sound a little intimidating, maybe something only those big shot Wall Street types care about, but trust me, this is a funding model that's making waves for businesses of all shapes and sizes. Seriously, everyone's talking about it. So imagine this. You need cash to grow your business, but you just shudder at the thought of bank loans, all that paperwork, and those strict repayment schedules. Or maybe chasing venture capital just feels like too much. All those pitches and giving up equity can be a real headache. Now, what if there was another way? What if you could sell a piece of your future revenue today to get the cash you need right now? That's the basic idea behind revenue-based financing, or RBF, as you might hear some people call it.
Yeah, it's definitely gaining traction.
And it's shaking things up in the world of business funding.
Absolutely. What I find so fascinating is how it really flips the script on how we traditionally think about getting funding.
Right.
It's not about taking on debt. With all those interest rates and those fixed monthly payments breathing down your neck, it's more like partnering with a company that believes in your success. They're giving you capital up front, and in return, they get a portion of your future revenue until they've recouped their investment, plus a predetermined return.
Okay, so that's the high-level overview. But let's dig a little deeper. We're lucky to have a financial expert with us today who lives and breathes this stuff. So let's break this down. How does this whole selling future revenue thing actually work? Can you give us an example?
Sure. Let's say you're a business owner and you're expecting, let's say, $100,000 in revenue over the next year.
Okay, $100,000.
You need capital now to maybe expand your operations or launch a new product line. An RBF provider, like let's say Wallvestment Capital, they might offer you, say, $75,000 today in exchange for a percentage of your future revenue, until they've recouped their initial $75,000, plus their agreed-upon return.
So it's like getting an advance on your earnings.
That's a good way to put it.
You get the cash you need right away, and the RBF provider basically becomes a silent partner.
Yeah, like a silent partner.
Sharing in your future success. Now, why would a business choose this over a traditional bank loan? I mean, there's got to be a catch, right?
Well, every funding model has its pros and cons, but the speed and flexibility of RBF are definitely big draws for a lot of businesses.
Especially those who maybe wouldn't qualify for a traditional loan.
Exactly.
So how fast are we talking?
With RBF, you can often get funding much faster than with a bank loan, sometimes even within a few days.
Wow, that's fast.
And the repayment is tied directly to your revenue.
So it kind of ebbs and flows with your business.
It does. If you have a slower month, your payments adjust. No fixed monthly payments hanging over your head.
Okay, so it's fast, it's flexible, and it seems way less intimidating than those bank loan applications. Now, who can actually qualify for this RBF magic? Is it just for like tech startups? Or could, say, your local bakery down the street get in on this?
You know, that's one of the things that makes RBF so appealing. The barrier to entry is actually pretty low.
Really?
A lot of providers have pretty basic requirements. For instance, Wallvestment Capital.
That's the one we mentioned earlier.
Yeah, they only require $5,000 in monthly revenue. And then for your business to have been operating for at least 3 months.
So yeah, that local bakery with a steady stream of customers, they could totally be a good candidate for this.
Absolutely.
And it's not just bakeries.
No, think about restaurants hustling through dinner service, retail stores gearing up for the holidays, service businesses with a loyal clientele. All of them could potentially benefit from RBF.
So this is sounding more and more appealing by the minute. But what about the application process? Is it as complicated and time-consuming as like those horror stories you hear about with traditional loans? Actually, it's designed to be super straightforward.
Okay. That's good to hear.
Most RDF providers have really streamlined the application process, and often it's all handled online.
Oh, that makes it a lot easier.
You typically just need to provide basic financial info, like bank statements, proof that your business is running, things like your driver's license, and a voided check.
Pretty standard stuff.
And some providers even offer same-day funding decisions.
Wait, same day?
Yeah.
That's got to be music to the ears of any entrepreneur.
Especially those who've been stuck waiting weeks for a loan approval.
Oh, yeah, I've been there. So let's say you've secured RBF funding. How does the repayment actually work? Are there different options?
You're right. Most RBF providers get it. A one-size-fits-all approach to repayment just doesn't work in the real world. They usually offer a few different options to fit the needs of different businesses.
Okay, let's dive into those options. This is where things start to get really interesting. What's the first option? First, you've got fixed payments. This one's pretty simple. It's for business owners who like predictability, knowing exactly what to expect.
Makes sense.
You agree to a fixed payment amount. You'll pay back daily or weekly, depending on the terms you set with the provider.
So kind of like a traditional loan in that sense?
In a way, yeah, but without the fixed interest rates and the pressure of set monthly payments, regardless of how your revenue's doing.
Okay, fixed payments. Got it.
Yeah.
What about for businesses that have more, up and down cash flow, like a seasonal business that's booming certain times of the year, but maybe slower during others?
Right. For those businesses, there's the revenue-based payment option.
Okay, tell me more.
This one's popular with businesses that see those fluctuations in their cash flow. Instead of a fixed amount, your payments are a percentage of your credit card sales.
So it's like a sliding scale.
Exactly. If you have a great month, you pay back more. If things slow down, your payment adjusts.
So it's built-in flexibility. I can see how that would be a huge relief. For businesses that don't have that consistent, predictable revenue stream, what's the third option?
And then there's what some providers call super flexible repayment.
Super flexible, huh?
Pretty much what it sounds like. Your repayment is tied directly to your daily revenue.
Daily revenue, wow.
So if you have a day with zero revenue, you don't make a payment that day.
Okay, that does sound super flexible. For someone who, gets nervous about fixed debt, this could be a real game changer. But let's talk about cost. Most people hear financing, and they immediately think high interest rates. How does that work with RBF?
That's a great question.
Mm-hmm.
And it's where things can get a little tricky. Some RBF providers structure their fees in a way that kind of resembles interest rates, which can be confusing and tough to compare with traditional financing options.
So how do you know what you're really paying?
Well, Wallvestment, for example, they've chosen a more transparent approach.
Go ahead.
They use something called a fixed factor rate.
Fixed factor rate.
Basically, it means you know the total cost up front.
Okay, I like that.
No hidden fees, no fluctuating interest rates to keep you up at night. They basically multiply the amount you borrow by this fixed factor, and that's the total you'll repay.
So, to use a simple example, if I borrow $10,000 with a fixed factor rate of, let's say, 1.2.
You'd repay a total of $12,000, no matter how long it takes you to repay.
Interesting. So it's like a built-in price tag for the convenience and flexibility.
Exactly. And here's another interesting thing, at least with Wallvestment. The longer your repayment term, the lower your effective annual rate ends up being.
Wait, so a longer term means a lower rate?
It does.
That sounds counterintuitive. Shouldn't a longer repayment term mean you're paying more overall?
Technically, you are paying more overall, but because it's spread out over a longer period, the annualized cost is lower. It's like you're spreading the cost of the financing over a longer time, which reduces the impact on your cash flow each year.
Okay, I'm starting to see the logic there. Now, what about early repayment? Is there a benefit to paying it off ahead of schedule?
That's one of the really appealing things about RBF. Especially with Wallvestment, they offer a pretty big early payoff discount, anywhere from 20% to 100% off the remaining factor.
Hold on, 100% off. So you could potentially pay no fees at all if you pay it off quickly.
That's right.
Wow, that's a big incentive to pay back sooner.
Definitely.
Okay, so far we've been talking a lot about Wallvestment Capital. Are there other companies offering RBF, and do they all work the same way?
Wallvestment's definitely a big player in the RBF space, but they're not the only one. More and more companies are offering variations of RBF.
So there's a lot of competition out there.
There is. And while the basic idea of selling future revenue for upfront capital, that stays the same, the details can vary.
Like what kind of details?
Things like eligibility requirements, factor rates, repayment options, additional fees. It can all be quite different from one provider to the next.
So it's not as simple as just saying RBF is RBF. You really need to shop around.
You do.
Compare different providers.
Yeah, see which one aligns best with your business.
And your comfort level.
Exactly.
Now, speaking of Wallvestment, they seem to offer a pretty wide range of funding amounts, from what I've seen.
They do. Wallvestment offers funding from as little as $2,500. All the way up to $2 million.
Wow, that's a huge range. Why such a broad range?
That range is important. It lets them work with businesses of all sizes and at all different stages of growth.
So whether you're a tiny startup just getting off the ground, or a larger company looking to expand, there's a potential fit.
There is.
Okay, we've covered how RBF works, who qualifies, the different repayment options, even the cost considerations. It definitely sounds like a promising alternative to traditional financing for a lot of businesses. But let's take a step back for a second. Really think this through. What are the potential downsides or risks of RBF? that people need to be aware of before jumping in head first?
That's a great point. RBF isn't a magic solution for every business or every situation. It's crucial to understand the potential downsides and weigh them carefully against the benefits before making a decision.
All right, so let's get into those potential downsides. Right after a quick break, we'll be back in a flash. Okay, so we're back. And before the break, we were just about to dig into some of the potential downsides of RBF, the risks that people should be aware of.
Right, so while the flexibility and speed of RBF, they can be really attractive, it's important to keep in mind, you are essentially selling a piece of your future revenue.
So you're ultimately going to be paying back more than you originally got.
Exactly.
Even though there aren't those traditional interest rates, you're still paying for that convenience and flexibility.
That's right, it's a trade-off. You're paying a premium for faster access to capital, and for the comfort of knowing your repayments will adjust if your revenue goes up or down.
Okay, that's definitely something to consider. Any other potential drawbacks we should be thinking about?
Another thing to think about is control. When you bring in an RBF provider, you're giving them a stake in your future revenue.
So it's not just money, it's also about influence.
It can be. You might have to share more financial information with them. Maybe even give them some say in how you run your business.
I can see how that could make some entrepreneurs hesitant, especially those who are used to making all the decisions themselves.
Absolutely. It's a big decision, and you shouldn't take it lightly. You really need to weigh the benefits of the funding against how it might impact your freedom as a business owner.
Okay, so we've got the potential for higher overall repayment and the possible loss of some control. Any other red flags to watch out for?
Well, RBF is still a relatively new funding model.
It's still evolving.
Yes, and that means the regulations around it, they're still being figured out.
There's a bit of a Wild West out there.
In a way, yes. It's an exciting space with lots of innovation. But you got to be cautious. Do your research before jumping in.
Good advice.
Yeah.
All right, so we've talked about the potential downsides, but let's shift back to the positive side for a minute. We've mentioned how RBF can be a game changer for businesses that might not qualify for those traditional bank loans. Can you expand on that a bit? What makes RBF so attractive to those who might have been shut out by the traditional financial system?
That's a big part of what makes RBF so interesting.
It really is.
It has the potential to really open up access to capital.
Level the playing field.
Exactly. Make funding more available to those who've historically been overlooked by banks.
So instead of focusing just on credit scores and collateral,
RBF providers are looking at the potential of the business and its future revenue.
They're betting on the entrepreneur.
Right, on their vision.
Yeah.
And their ability to generate revenue.
This opens doors for startups, small businesses, minority-owned businesses, groups that often struggle to get traditional funding.
It does.
It's like RBF is giving more people a shot at building their dreams.
Yeah, it really is. And I think that's what makes this funding model so exciting. It's not just about money. It's about empowering people and encouraging innovation by giving them the resources they need.
All right, we've covered a lot of ground, how RBF works, who qualifies, different repayment options, the benefits and the drawbacks, even its potential impact on the bigger picture of finance. But let's bring it back to our listeners for a minute.
For sure. It's all about giving them the info they need to make smart choices about their own businesses.
Exactly. So for those listening who are thinking, okay, this sounds interesting, but is RBF right for me? What are some key questions they should be asking themselves?
That's the big question, isn't it? First things first, they need to really look at their finances, their current situation, and their future revenue.
Make sure they can actually handle the repayment.
Right. Can they realistically afford to repay the financing, even if their revenue dips a bit? And are they okay with the potential cost, even though it means paying back more than they initially received?
It's not just about getting the money. It's about managing the repayment responsibly.
Exactly. And they also need to consider their comfort level with giving up some control. Are they willing to share financial data? Maybe even involve the RBF provider in some business decisions.
That's a big one for a lot of entrepreneurs.
It is. And finally, they need to do their research. Look into the different RBF providers out there. Don't just jump at the first offer. Compare terms, factor rates, repayment options, and look into the company's reputation.
It's like shopping for anything else. You compare prices, read reviews, make sure you're getting a good deal.
Exactly. And remember, even if RBF isn't the right fit right now, it's still a useful tool to know about. Your funding needs might change in the future, and having this knowledge could give you an advantage.
Okay, let's shift gears a bit and talk about the future. Where do you see RBF going in the next few years? Is this just a fad, or is it here to stay?
I think it's safe to say RBF is more than just a trend. It's filling a real need in the market. And it's growing fast. I wouldn't be surprised to see it become even more mainstream.
So we might be looking at a future where RBF is as common as getting a bank loan.
It's definitely possible. As the model develops and more providers come in, we're likely to see even more innovation. Maybe even RBF tailored for specific industries or business models.
Wow, so it could become even more powerful.
I think so.
That's really interesting. It's like we're watching a whole new financial system being born.
Yeah.
Now, before we wrap things up, I'm curious about your personal take on all this. What's the biggest aha moment you've had while learning about this topic?
For me, it's the realization that access to capital, it doesn't have to be a roadblock to entrepreneurial dreams. RBF isn't perfect, of course, but it's moving us closer to a world where funding is more available to those with passion and good ideas, even if they don't have the traditional financial background.
It's about leveling the playing field.
Exactly.
And that seems to be a big part of the message from companies like Wallvestment. Empowering businesses, fueling success. It's about the possibilities, not just the money.
Absolutely.
All right, so before we let our listeners go, let's give them something to really think about. What's one question they should ask themselves after this deep dive?
I'd say, how could this type of funding, this idea of selling future revenue, change your approach to growing your business now or in the future? Could it open doors you thought were closed? Could it give you the confidence to take bigger risks, knowing you have this flexible funding option available?
It all comes down to this. Is RBF a tool that could help you reach your goals?
And if it is, are you ready to explore those possibilities?
All right, we've covered a lot today, but this feels like just the beginning of the RBF conversation. As this funding model keeps evolving, it'll be fascinating to see how it shapes the future of business.
I agree. It's definitely something to keep an eye on.
So for anyone listening who's thinking, okay, I'm intrigued, I want to learn more about this RBF thing, where should they go?
Well, the good news is there's a ton of info online. A great place to start is to check out the websites of some of the bigger RBF providers, like Wallvestment Capital.
You've talked about them a bit today.
Yeah, they have really detailed explanations of what they offer, FAQs, blog posts, even case studies. So you can see how RBF has actually worked for other businesses.
That's helpful. And I bet they'd be happy to answer any questions, too.
Oh, absolutely. Most providers have teams who can walk you through the process, help you figure out if you qualify, even give you personalized quotes.
So don't be afraid to reach out, ask questions.
Yeah, this is your financial future, so don't be shy.
Knowledge is power, right?
Especially when it comes to money. The more you know, the better decisions you can make.
And even if RBF isn't the right fit for you right now, this knowledge is still valuable. It's about knowing what's out there, what your options are.
Exactly. The more tools you have as an entrepreneur, the better prepared you'll be.
Who knows, maybe RBF will be that thing that helps you take your business to the next level.
It could be that missing piece.
All right, so there you have it. Our deep dive into the world of revenue-based financing. We've talked about how it works, who it's for, the pros, the cons, even what the future might hold for this funding model.
You've got the info you need now to make smart choices about your business.
Remember, this is about empowering you, giving you the knowledge you need to build the business of your dreams.
So keep those entrepreneurial dreams alive.
That's a wrap on this deep dive. Until next time, keep learning, keep exploring, and keep pushing the boundaries of what's possible.